Over the last 2 years, I've spent most of my time trying to come to an understanding of how AI is going to affect our world and how the whole semiconductor and tech industry fits together to make that happen. As we go through building the infrastructure to deliver AI, creating the software and the hardware to make it work most efficiently, and then the delivery of the hardware and how it's going to affect the companies that are in the ecosystem. I've identified about 60, and what I've then done more recently is say, okay, with my understanding of this ecosystem, what are the earnings of these stocks going to be in the future? And how does their current price equate to their future earnings? And what are the best buys now for what I believe the price of stocks are going to be on January the 1st of 2028? So what I have to do is re-engineer my portfolio backwards to say, okay, I believe that Iran's stock price is going to be 30 on the January the 1st of 2028. What is it now? Is it fairly priced? Is it overpriced? Is it underpriced? And where should I buy into it if there is a dip? So again, I use the word reverse engineering. This is what I think it's going to look like on January the 28th. This is what it looks like today. How do I get there and maximize my return? Because again, you can have a wonderful stock, a wonderful company like Palantir. And if its price is overvalued today, it doesn't matter what its price is going to be on January the 1st, 28, because it's overpriced today. You get my drift? If, in fact, you believe, like I do, that the price of a stock is a component of its earnings per share and its PE ratio. So if its PE ratio is too high now, it's likely going to settle down to a reasonable one in the next 3 years, and thus the price won't go up. I hope you understand it. What I've done is I've taken the 60 stocks. Well, let me show you on my computer, and I've created my today's portfolio, and then I'm going to what I want to own on January the 1st. And so I'm doing a lot of buying and selling to get to where I want to go. Let me show you on my computer. Okay, this is what you're going to find on my website, Best of Us Investors, under Kerry's cheat sheet, and I've relabeled it the tell sheet, this part of it. The cheat sheet's more of the fundamentals. The tell sheet is more of the analysis that I do. I believe that a price of a stock is directly correlated to the company's ability to generate profits. So if I can determine that a company's going to grow its profits, its earnings per share, over the next 3 years, and it's fairly priced today, that is, its PE ratio is within reason, then I can, with some level of confidence, predict what the price is going to be 3 years from now if they tell me what their earnings are going to be 3 years from now. I then say, okay, if I can put all that together through data that I know where to search on the internet and where I can pull it and analyze it, then I can predict what the price is going to be in the future. If once I know what the price is going to be in the future, I merely have to look at what is the price today and in which stocks am I going to get the most gain with the minimal amount of risk. And minimal amount of risk comes down to, are they making money today and have they had a good history of making money? Or are they a nonprofit hoping to be profitable? That puts on risk. So if I know that, then I can put that into my equation and maximize my return. So the first thing I do with every one of my 60 stocks is determine what is their projected growth, average growth per year over the next 3 years. And I come up with, here's Micron Technology. Based on what the analysts say and what they say at their earnings calls, they believe they will average a 163.8% return or growth in their earnings over the next 3 years, as compared to Meta, who says they're going to grow at a 14.3%. Then what I look at is is their PE ratio out of line? Well, Micron's PE ratio is 13.35, or 13.5. I know that the average for the S&P for the last 20 years is 25, so that says no, that's kind of reasonable. If I then look at Meta, theirs is 27. Well, it's a little above, but it's not 125 or 105 like some of them are. Or we come down here to Palantir, and they have 150.79 and a growth rate of 37. Now, the growth rate of 37 is fine. I want something over 20. But if that growth is already priced into the stock in its PE ratio, well, then I need to consider that when I'm reverse engineering. So what I then do is go and ask Wall Street, what are each of these stocks' projected earnings per share on January the 1st of 2028? And I say, okay, let's create a level playing field and say, okay, if everybody's PE ratio is now 25, which is the average for the S&P 500, now who's giving me the biggest gain from today's price to their projected price in 2028? That should, 2028 with a PE ratio of 25. And I give you right here what their rate of return will be. So then what I do is say, okay, if I know that rate of return that I should get if their earnings per share grow as they say they will. And I will monitor this on every earnings call and change it to make sure I stay current. Then what I've just added is this over here. This is Kerry's portfolio today. In 2025, these are the stock he owns. These are the number of shares he owns of each I own of each of the stocks. This is their current value. And this is the percentage they represent of my portfolio, okay? Then what I do is say, okay, knowing what I know now of what I believe the price is going to change, here I see that IREN is anticipating their growth in price will be 352% over the 3-year period. How does that compare to Apple, who's going to grow at 27%? So now what I do is say, okay, based on these new earnings that I've been able to ascertain, how many shares of each of these stocks do I own today? And how many shares of each of these stocks do I want to own on January the 1st, 2028? So now my task becomes, and as you can see, I've highlighted them in red and green. Everything that is green, I need to add to my position. Right there. I'm going to go from 200 shares of ACMR to 700. I'm going to go from 3,000 shares of AEHR to 1,850. Why? Because I'm engineering it to minimize risk. ACHR has some potential, but it is a nonprofit today. Or it's very limited profit. Its growth is very dependent on current technology, staying current, and the growth of the EV market. So I want to minimize my risk there, and maximize my exposure here. And I've done that for every stock. Now, the interesting thing then that I have done is I print this sheet out, as you see here, and every morning I take a look at it and say, okay, what is it I want to buy and sell today to get from here to here? Now, what is that difference going to make? Well, it's going to take a portfolio that I share with you now of $756,000 to a portfolio of 1.43 million. And am I confident of that? No, I'm not confident of that, because all of these prices represent a 25 PE ratio. Some of them are grossly underpriced. Few, if any, are overpriced. So I believe that if IREN grows like I think it's going to be, and its PE ratio is 35 rather than 25, I'll have roughly a third more in Iran. So that's how I do it. And what I believe this can do for you is give you guidance as to, number one, what should you expect of these stocks? And number two is, what do these people do? And what does the world think of them? Well, that's this. This is a deep dive. This is a podcast that I've created on every one of these stocks that will give you what they do. Then this is a briefing. This is a document that I will send you that takes the words from the podcasts and puts them in a 2 to 3, 4-page document that says this is what COHR does. And you can create a library of each one of your stocks that you choose to own so you know what they do and have some guidance from the analyst as to what they think is going to happen to that stock. Because again, if you don't know what you own, and you're depending on somebody like me, well, you don't know me, and you don't know my history. Don't do that. Go and find someone who can share their knowledge with you, whether it's a financial advisor or a YouTuber or a Jim Cramer. If they can share their knowledge with you, and you have confidence now where to go verify their knowledge, then you'll win. But if you're totally dependent on someone else to guide you, you'll lose. You'll lose because they'll disappear. They'll be gone in the wind and you'll be holding the bag. Know what you own and then build a strategy that I'm here and I want to get there. I ran the Senior Olympics, and I ran the 100, the 50, and the 200, and the 400 meter. 400 meter was a killer. But what I knew was, I'm starting here, and I'm going to finish here. I got to go all the way around the track, and I need to have something in the engine as I hit that straightaway, as I have to kick to come. And that's what this does. That's what Kerry's portfolio 2025 to 2028. I want you to get a copy of this and change the name on the top. I will give you access to this format so that I can send it to you in an Excel spreadsheet with instructions as to how you change the number of shares and the stocks that you own, and then all the numbers come together and project what your portfolio is going to be on January the 1st, 2028. That gives you a plan. That gives you a plan that you can follow and know where the finish line is. And that's what's important. What the finish line is, not what's happening today. Because today, it has so much unrealistic fluff in it. It has the FOMO. It has the meme. It has manipulation. But if you do your research, understand the price of a stock is its earnings per share multiplied times its PE ratio. And if its PE ratio is too high now, it's probably going to settle down to something that's more realistic, and the price will not grow in accordance with the growth in the earnings per share. I hope you understand that. This is going to be my mission to every Friday sit down with my tribe. We usually do a 2 to 3 hour call and explain this. This is where I am today. This is where I'll be tomorrow. This is how you can access it. This is how you can learn from it. This is how you can become an informed investor. That's my objective for you. Now, right now, this is free. A 14-day free trial. Come, get to the website today. Sign up. Come to the Stock Talk Friday. We'll go through it. Then come again the next Friday. We'll go through it again and answer any questions you have. And then you can decide, we'll do it a third Friday, and you can decide, do I want to be a part of this? Or do I now know everything I need to know to make informed investment decisions? Or is it worth $19.95 for me to work with a group of people who have a plan to how to start the race, and how to finish the race, and then how to adapt as we go. Because this will all change. This is building the infrastructure. We will then deliver the software, and then we will deliver the AI itself, and that will be a whole different set of stocks. Okay? In 2028, this picture will look very, very different. I hope that makes sense to you. I hope that can give you some confidence. And again, I think I've been using this. It's really helpful to sit down in the morning, look at what the stock market is doing, and saying, okay, I have a plan. How can I implement that plan based on what's happening today? What opportunities are being presented to me, not based on what's happening today, but what's going to happen in the future and where I want to be on January the 1st of 2028. I hope I can help you do that. Again, go to the website, sign up for the free trial, and come meet with me on Friday, this Friday and the next 2 Fridays, so that you come to better understanding of what you own and what you want to own. Talk to you again soon.